Then let's turn to Gerard, Cassidy, and our Hugh son. Gerard, we'll start with you. Who are you most excited about and most concerned about?
I think, Kelly, what we're excited about is the big banks with strong consumer deposits. It's been 15 years since investors have had to look at the right side of the balance sheet. These core consumer deposits are the funding of the balance sheets that give the banks big margins and big spreads, which we saw in 2022 and will continue to see in 2023. So who is that? Bank America is one. There's some of the regional banks like a KeyCorp, Fifth Third, JP Morgan as well. These are the companies that have really strong consumer franchises that will lead to higher profitability in 2023.
And then what's the flip side? Who are you a little bit more bracing for?
Yep, no, that's a good question. I would say you've got to be careful about capital markets. We all know 2022 was a terrible year for investment banking. We don't think it springs right back here in the first part of 23. And I think as long as the ECM markets continue to remain under pressure, as well as advisory, that means Morgan Stanley and Goldman could struggle in the first part of the year.
They're all rallying today for what it's worth. Hugh, JP Morgan might have a little bit of a distraction here on the eve of its big report with this report about what happened at the student loan business that they bought. What is going on here?
Yeah, let's set the scene. Okay, so, and we broke this story in 2021. We broke the news that JP Morgan was acquiring a student loan financial aid platform called Frank. Okay, I hadn't heard about it before that day, but we learned about it at the time. We spoke to the founder. It was reported, it was advertised to have 4 to 5 million users at the time, and JP Morgan touted it as the fastest growing such platform that was around. And so a few months after the acquisition, we learned from a lawsuit filed in federal court last month, JP Morgan is sending out a batch of about 400,000 emails to these purported Frank customers, starting the marketing ball rolling, trying to monetize what they had purchased for $175 million. 70% of the emails bounced back.
Wow.
And so this is the first sign to them, and it took them several more months to really ascertain what had happened. When they purchased this as startup, they actually acquired also the IP as well as the emails between the founder and other parties. And what they had been able to reconstruct is the founder, in order to get the deal done, had actually hired a data scientist to confect 4 million fake users, fake accounts, in order for them to close the deal, seal the deal. And it turns out actually in these emails, the founder actually asked her head of engineering for help in coming up with these accounts. He declined. And then she went ahead and looked for a data scientist at New York City College to help her. And it only cost about $18,000.
Incredible. And is nefarious. And does it, Gerard, raise for you any questions about due diligence at JP Morgan? I don't know how you prevent something like this unless you send out the blast email first before you buy them.
No, Kelly, it's a good question. And when it's fraud, even in lending, it's very hard to detect fraud, which is what we had here. So, yes, maybe the due diligence could have been done better. But we have to remember, it's very hard to detect fraud, the traditional fraud as in the lending area. But in this case, of course, this is digital.
Hugh, what do you think are the lessons here, either for JP Morgan, just as perhaps a sign of the times? It's a pretty shocking story, almost, do we say Theranos-esque? I mean,
shades of Theranos here. I want to say, we all kind of know what Jamie Dimon's like. We would assume that he would go Krakatoa after hearing this.
Sure.
So it's an embarrassing episode for them. He's been defending their huge expense in technology. This is one of those purchases. And then you have to go back and look and question their due diligence. I think the bigger story is, if it is difficult to do due diligence in this case, in the age of AI, in the age of being able to use algorithms to create fake identities, are we going to see more of these? And that's the question.
No.